Brian Shin. Shares of U.S. Silica really popped this summer after you reported revenue up 40% and a tripling of profits. Tell me, can you keep it up?
Well, we think we can, Greg. We believe we're in the early innings of this shale revolution, and if you look at the product that U.S. Silica supplies, a specialty industrial mineral that's critical to the shale gas and shale oil production, and if you look at the growth that's projected for that industry over the coming decades, we feel like we're right in the middle of that and very excited that we have great growth prospects for the future.
Well, your company went public at 17 earlier this year, had a rough spring, but has since come back substantially. Do you think a lot of that downturn was due to the anti-fracking forces out there? Because there's still a very large percentage of your shareholder base which is holding the stock short.
So as we look at it, our products, as I said, are essential into the industry and are sold out. The oil and gas drilling has increased quite a bit year on year. And so we don't think the anti-fracking issue is so much. We think it's more that a lot of shareholders just don't understand our company yet. We've only been public for a couple of quarters, but during that time, we've delivered the best financial results in the 112-year history of our company. So we're knocking it out of the park on the financials. And
who are some of your customers?
So our customers are the major oil and gas service companies, people like Schlumberger, Halliburton, Baker Hughes, those type of folks.
How hard is it for competitors or potential competitors to duplicate your product? Is there a moat around your business?
It's very difficult because the products that the customers want are really only located in 3 states, Illinois, Wisconsin, and Minnesota. And to be able to extract those products from the ground, you have to go through a very complicated process. Usually takes 2 to 3 years to open up a new mine site. And there's a lot of concern amongst residents in places like Wisconsin, for example, around new mine operations opening up. So there's kind of a natural barrier to capacity additions in this industry.
What about international business? How hard is it for you to transport your proppants to other countries?
We sell a little bit of volumes outside the U.S., but transportation is very expensive. The flip side of that is a benefit for us, though. We'll never have international competition because it's too expensive to, say, import frac sand from China, for example. We don't see any of that. So unlike some other parts of the industry that have international competition, I believe most of our competition will be domestic.
What kind of pricing power do you have?
We have really good pricing power in the chain. Even in the industrial side of our business, which is kind of the heritage of U.S. Silica, we've gotten good year-over-year pricing going back decades. So we have great pricing power.
All right, what's your outlook for the rest of the year as well as 2013? And do you think if we get a change in administration, that will help your business if we get a Romney presidency? Or if we stick with Obama, still give me your forecast.
Right. So our business is sold out, and we project it to continue to be that way for the rest of the year. We're adding 2 new plants next year. So we have 13 facilities right now. We're going to add facilities 14 and 15, and we expect that customers will really like our products and want to buy those from those new facilities. In terms of the presidential election, look, I think that the shale oil and shale gas has become so ingrained in the fabric of our economy now, it doesn't matter who wins the election. I think that industry is going to do great, and I think our company is going to do great.
This market has fewer players.
We're coming into a Monday where we're going
to enter a new stage of tech.
It's a stock picker's market.
Welcome to the 5 dumbest things.
Apple reported earnings.